Welcome to Talk with FS, where we make it simple to every trader around the world and where we teach you how to make money on your own without stress. Please like, share, and subscribe to our channel for more videos. God bless you.
Video, I'll be talking about terminology used in forex trading. As we all know that in every business, in every profession, they always have a word that they use to code for people that are in that profession. That if I make a statement, you already know what I am saying. So also we have it in the forex market. We want to look at this word. Now, if I'm talking to you if I said to go long, it means buy, that I'm buying. So if a trader tells you that he went long on a currency pair, for example, GBP USD, it meant that he bought the pair. Oh, if I say I am going long on GBP USD in the next few minutes, it means I want to buy GBP USD. So go short means to sell. While if they tell you that they short a currency pair, I short Euro USD, it means that they sold the pair. And another word here is bullish market. This is a market that is going upward. That green and the bull represent the market is going upward. That is a bullish market, meaning that the price is rising. The price of a market of a particular pair you are buying is rising. While bearish market, this is a market that is going downward, meaning that, let's say, for example, on GBP USD, I look at it that, oh, GBP USD, I want to go short, I want to sell, I want to go bearish on GBP USD. It means I believe that the price of GBP USD will go down. That is what it means, and it is being represented by bear. You can see the red one going down. Now, we want to talk about bulls. The buyers are referred to as bulls in the forex market, and bears, the seller, are referred to as bear in the forex market. Now, the question that may be popping up in your heart is, why did they use this animal? Why not other things? The reason why they use this animal is because if the bull want to attack, if a bull want to attack, his strength or her strength is on the horn. And while he was trying to attack, he will be raising the enemy up with his horn. While the bear, if the bear want to attack an enemy, he will make sure that he hits the opponent to the ground by making sure that he use all his strength on the opponent by hitting the opponent to the ground. That is why they are using these two animals. And we all know that naturally, bulls are stronger than the bears. But we'll get to that in our next video. Let's talk about what is trending market. A market that has a direction is either moving upward or downward. That is what we talk about trending market. Now, if a market is trending, for example, let's talk about if a market is trending on the upward side. By what I told you, that if something is going upward, it means it's going bullish, it's going long. So now, let's say, for example, I want to go long. Now the market moved. It moved from the low and it got to a high. Then it gave us a pullback. And this pullback, it got to this level. Now we'll get what we call higher low. And why did they call it higher low? Because this low is higher than this low being created, the initial one. Now they moved away, they created another what we called higher high, which is represented by HH. This, why do we call it higher high? Because this is height that the market created, the price created before, and it pulled back and it created another height. And like that, on and on, you have higher low, higher high. That is how you know a market that is trending. That's how you know a market that is trending upward. So now, if we want to talk about market that is trending downward, meaning a market that is going short or going bearish, how do we start? We start from a high, and the market dropped. It created a low, and it pulled back to give us a lower high. Why do we call it lower high? Because this high that is being, this is the initial high that is being created, and the market went down and it pulled back to this region, and it gave us this region and it moved away. So now this high that it created here is what we call a lower high. Then we will now call this one lower low. Why do we call it lower low? Because this is a low that the market created here, and the market went further to break this region, this particular zone, by creating another low. So which means we have lower low. Then the market pull back again to give us a lower high. When it gave us this lower high, it moved down again to give us another lower low. On and on and on like that. The market gave us a lower high. It went down, it gave us a lower low. This is how we know a market that is trending downward, meaning that a market that is going short or bearish. A market that is going long or bullish. It's referred to as trending upward. Trending upward. The market is going upward while this is going downward. So that is all about that. And also, we want to talk about ranging market. What does it mean for a market to be ranging? It means that this market is neither going upward nor moving downward. That is what ranging market is all about. A market is said to be ranging if it does not have any particular direction. It's neither moving upward nor downward. Like in the previous one, I showed us that a market going long, meaning that it's moving upward, and also I gave you a market that is going downward, the whole. Now, this market, they said, ranging, it does not have any particular direction. It's neither moving upward nor moving downward. So it did not create any particular movement. It did not create, it's just moving in a particular position, like waves, a wave of water that is moving. That is exactly what the market is just doing, particularly when we take ranging. So this is what it's being referred to as ranging, market that does not have any particular direction. So that is all about. It is also called consolidation, consolidating market. We also call it a consolidating market. We also call it a consolidating market. So that is what we talk about this range market. And lastly, before I go, there is another one also we refer to as a channel. A channel. How do you identify a channel in the Forex market? A channel is a market that barely creates higher high and higher low. Barely. It will just, you'll see that it's moving upward, but it will barely create a higher high and higher low. You can see it's just moving like that. This is a channel, and most traders that trade this pattern, they'll be looking at it that if you break upward out of this place, you move like this, then come back, they will say they are buying and they are going. And some will look at it that, oh, it can move, it can break downward. Then it came back to retest that channel and they will say they are going short. So this is refers to a channel. We call it channel in the Forex market. Channel in the Forex market. That is what we called this particular one here right now. So I believe you enjoy yourself and you have gained a massive knowledge about the terminologies used in the Forex market. We have some other ones also that we use in fundamental, like CPI, non-farm payroll, many other things like that. Like today, there will be a non-farm payroll news on USD, on United States. So let's go straight to our chart to see what I just explained to us about bullish, bearish channel and the market that is going in a sideways, that means ranging market, and also a channel. Let's go straight to our chart to locate that. Okay, now this is our chart. This is how your chart will always look like. This is how your chart will always look like. Now, looking at this particular here right now, I'm going to be showing us something like, okay, this is AUDC A share. This is AUDC A share. We can see that this market here, it does not have any particular direction at this particular point in time. It's just moving. It's just moving. Now it break out and begin to continue with its higher high and higher low. Why this is what we call ranging. Ranging. Why this is what we refer to as channel. The market created a high, came down, it move up again. They didn't create any higher high or higher low as such, so they barely created it. And also they came down, they moved up again, they barely created and also came down again. And finally, they break out to the top, they retest there and they move upward. Now, also, I want to show you this particular market that is going downward when a market is moving. This market pulled down here and it came to this. This is a high and it created a low. It pulled back. It gave us a low, one low. So while this is lower high, this is a lower low, and the market pulled back there to give us lower high again. Then it came down to create another lower low. It pulled down by creating another lower low. Then the market pulled back here to give us a lower high, and the market still went down to give us a lower low. Now, one of the characteristics you need to look at while you are looking for all this, you can see that the market shows that it's going downward like that. And one of the characteristics you also look at is that you discover that the market does the lower high when it was going pulling back, it did not break the high that it created before. And also when it went down, when it wanted to pull back, it never break the high that it created before. When it pulled down and when it go back, it never break the high that it created before. Also, now when it got to this place, it violated it. And when it violated it, you can see that the market came in back with speed, with a strong, massive candle. We call that one another word when it comes to in the Forex market. We call it that they stomp on a lot of people because they believe that many people would have placed their stop loss here. When the market got here, they sell and they show them that they want to be going down with this pin, and later they just remove many of them. Then they continue to give us the last slow, which is the last lower low before they change the direction of the market. So this is a market that goes downward. This is a bearish, or we can call it a short, or trending downward. So that's that. So let me show you a bullish market, how to identify a bullish market. Would like to use this particular example here. Now this market started from here. It started from low. It pushed. It gave us a high. It gave us a higher low, and it gave us a higher high. We can see that those high break this particular height, and this low didn't break the previous low. That is the initial low. Then they pull back by giving us this higher low. Then they give us another higher high. Then they pull back, they give us another higher low. Then they break by giving us another higher high. Many of you will be looking at it that why didn't I mark this particular place as higher high? If you hear from the word higher high, meaning that the high that go or that exceed the previous high, that is the reason why you see that I never marked, because it never exceeded this particular height. So that's why I didn't mark that particular place. And so that is the reason why this one can never be higher low also. It can never be because this is the where the market started running from. So that is the place of interest. So I believe that you all understand right now that this is a market that is going bullish. This, or we can call it long or trending upward. So that is it. So meaning that if we say that a market is trending, that I'm on a very good trend, meaning that the market is going in a particular direction, either upward or downward. I believe that you all enjoy yourself and you have gained a massive knowledge about this market. Till I come your way in the next video, remain blessed.
Thank you for watching our video. I believe you are blessed and you enjoy yourself. And for you to enjoy more of our videos, please like, share, and subscribe. And please make sure you watch the next video for you to have more broad knowledge. Till I come your way, remember.